No, if guys thought the marketing was going to be hard, I mean, this report made it a lot harder, but a lot better. I mean, you have opportunity now.
Welcome to Hedge Heads, where hosts John Prishman and Ryan Tungseth discuss commodity markets, hedging, and anything related to trading futures. Remember, the risk of loss in trading commodity interests can be substantial. These are opinions only and not trading advice. While no one knows where the market's going, they're not afraid to share some ideas.
Well, John, that was quite a game-changing report last week, huh?
Yeah, it's exciting. I mean, it was a lot better than slowly drifting down at low prices into lower prices into spring. And now we have a fresh breath of air with this report. And I think it was record-breaking. That was the biggest cut in yield ever for corn, I believe. I'm not certain on it, but the most I can remember.
I would say, let's see, you were edging towards being a corn bull in December, early December.
Yeah.
You sounded almost bullish at the end of the month. And after this report, it's hard not to be bullish, isn't it?
Yeah, but you look at the spreads up front. I don't like what I see in beans or corn. A very unhealthy structure to the market. And what's odd about this market is what we're supportive, I would call it, for the next 2.5, 3 months. But where you're going to get your huge benefit is in marketings. And as you had kind of chuckled at my leaving the upside open, this is exactly why you do that. In years like this where it was changing rapidly, you go back to the end of harvest and it didn't look like any of this could even be possible. And then also beans, never rule out beans ever. It's
Not
just
ever.
one of those deals where I prefer elevator hedge to arrives on beans for what's going on right now. It's just all of a sudden back from the dead come beans. Really, it wasn't a great number for beans. It went from terribly bearish to pretty bearish. It was 380 is not a good number. Still, it's the breath of fresh air we needed for better marketings. And I'm very happy that it's happening. And I think that we're just on the cusp of a tremendous market volatility. I think that this is just the beginning. We have Trump coming in next week, right? The 20th?
Yep.
Is that right? So we're going to see his policies on day one. Oil's already moving a great deal because of what's happening. I wouldn't say it's because of Trump, their new sanctions on Russia, but you're already getting that volatility, and I think it's going to pick up. What I don't like is how heavy the front looks in both corn and beans. This is not a structure. The corn does not look tight. What are we at? 10 cents, March, May?
I haven't looked recently.
I think that's where it was today, and that's just it's losing as we go up. Shows a lot of farmer selling, so you're not getting this actual tightness in the physical markets at all. You're not seeing basis improvement. That's for corn and soybeans. So that's the one. Not to be a Debbie Downer, but that is really a warning sign that this is a completely fun-driven rally right now. And how much fuel does it have is the big question. I was busy today. Guys are definitely shifting stuff around. I wouldn't say people were heavily hedged at all before this report. That December was the big warning. When they cut 200 million bushels out, they don't do that to be nice. They were getting ahead of this. They knew this was coming. Theoretically, they couldn't have known because the report wasn't put together.
Right.
But it does seem like a 2020 getting ahead of the cuts, the big cuts. You couldn't do it all in one report, but still, it breathes some new life into the markets, and that I'm thankful for. We have time to think about marketing now. We're not going to rush anything.
So last week we talked about a little butterfly, and you were saying wait till after the report. Does that change anything from last week? How much it was a significant report, significant change, like you said, possibly record cut. How much does this change what you're looking at?
So I'm going to cut that butterfly in half. It will not be a butterfly anymore. It looks like you're going to have to do one side first and then the other. So obviously the bull side is what's been working. And then at one point, if you can dance with it just perfect, perfect, you'll put the other side on maybe at the same time, but I doubt it. It looks like they're going to be in two different parts. And in particular, I was looking at May, July, versus the December 25. And again, we're just tracking this. Some guys will call and probably get involved, but it doesn't come without plenty of risk. And then the other side would have been December 25 short, long 26. That spread, I think, was -1. That looks like it can get inverted now. Hard to know that one. I probably will eventually be a part of that. But I still don't like, look, beans don't look healthy at all. And don't be fooled by these moves up. This is definitely fun money coming in. This is not a fundamental move yet, including corn, which I'm surprised by to see how poorly the very front of corn's performing versus anything else. March should be gaining on May. You look at 1.5 something, and we've had some years like this in the recent past, and these spreads looked a lot better in those years and were supposedly as tight. So something doesn't exactly fit, but at the same time, should be very supportive for the front. I can see the front and the back end going two different directions, but what's going to happen is the grains are going to get very jumpy on any weather now. So that's the big difference, is we're capable of going a lot higher very quickly on threats. So I don't know what's next. I think South American second corn crop, Argentina maybe, but really it allows the market to go up very, very quickly. Totally different market than we even had like a month ago. This slow grinder, but I still don't like the way the spreads are up front. Shows a lot of stuff moving in the front. So when you have carry in the market, so let's say March to May for beans, if they're actually selling it and you want it to pull forward because it's getting tighter, you see that narrow up. And this is a time of year where that normally happens. So what the front's saying is there's plenty of grain in the commercial channels right now. And for beans, that's a big worry. This is normally a time of year where we get tight or tighter, or at least show tights. And I think we're as wide as we've been in a decade for this time of year. Things can change pretty quick, but that's the one thing I don't like. Also, there's a lot of spreads that are setting up in the feed side of stuff. You got wheat way below way narrow to corn. It's still like -60 up front, but anytime it gets to -90, that's when you start seeing feed get into the wheat get into the feed channels. So this is clearly going to hurt corn. Corn is the leader now, and that's going to be a rough market. Although beans were the leader today, it's still going to be a hard market because corn normally won't be able to pull up an entire complex, but interesting nonetheless.
I would say from the spread perspective, as it appears that lots of people were sitting on corn and decided now is the time to move it.
I think that it's been trickling in since harvest, and it really accelerated about 3 weeks ago, it feels like. That's when the spread started widening out. That's when the corn wasn't acting very good. And I think guys are still selling in even after the report they're selling, because people are mainly disengaged with these markets. They tried the bull side, they tried to hold the corn, and it really hasn't. They're very wary of trusting that this is going to continue to rally. So guys are getting while the getting's good. Basis you'd think would be better for the numbers we have. It didn't widen it out, so it didn't go up 13 cents. They didn't wind the base straight out, which is nice. But still, you want to see something fit with these numbers to make it seem like it's real, and we're not seeing that yet. But it's early. It's early in the winter, unfortunately. I wish it was late winter, because what are we, -5 today? Whatever. No, we're early in the winter, and things can change going into spring.
You just need a Vegas trip, I guess.
It doesn't help my buddies. I asked him to. He's in the Caribbean and he's sending pictures, and it's better than here. A lot better.
I'm shocked.
No, it's way better.
I'm shocked. It's only -5 here.
Yeah, no, I regret asking.
-23 with the wind chill, John.
And it's just not going to let up. And the worst is I'm not going anywhere this winter. Apparently, I have nothing planned, and that's where I guess I love Minnesota. Apparently, in the winter.
I think it's you love this podcast so much, you need to be
I
here
can't leave
for it.
Yes, but different markets. I like it, but specifically, what changed? I am now thinking that I do like the short dated December stuff, but you can now look at 460 puts for December 25 corn, and I think they were 35 cents today. So I would like 470s for 35 cents if we can get them. And that will get our floor to 435 for easy math. And then you have your upside wide open. So the December puts 25 are starting to make some sense now. If we can get a further move up, I would love 480s for 35 cents. So it's something we're tracking. But now we have, this is where guys are either going to do well with marketing or bad. And I think that most people go with a path of least resistance, the free path, and hedge to arrives will be popular on this rally. I'll never talk a guy out of a profitable price, but if there was ever a year that you'd want to keep your upside open, it's this year. You have all this potential after this report, and that's where you want to get better in your marketings. I've seen things on Twitter where what that one guy was tweeting that marketing in the top third is the winning marketing, and I don't believe that to be true at all. These are the kinds of decisions right here where you're better off, or you can win in marketing by choosing to open that upside, getting 550 later on, or choosing 470. That 80 cents is going to be a big difference in the bottom line. So that's where I think that you really try to improve on marketings, recognizing markets that have a lot of potential, and then doing strategies that open the upside. I just simply gave an example of a very easy, cut and dry, easy math, no margin calls, just simply buying a put to see what happens. We have a lot. Everybody kind of has forgotten about what's going to happen in a week here. I don't know that the markets will be okay 2 weeks from now with the policies that are going to be put in place. That's kind of, beans clearly don't care today. They're having a good time. But if last time this happened with Trump, beans went up into the tariffs, and then when they put the tariffs on, beans went down. I mean, it was that easy. I don't know why they were going up into the tariffs last time, into 2019, but they were. So beans feel like the same market as that last time this happened.
Maybe they want banned cooking oil.
I don't think they got that 45Z, and it's very political with all that, and it probably would help soybean oil right away, and over the long term, but I don't know. I mean, could he ban that and beans go limit up? I guess anything's possible.
I mean, I never count beans out of either direction.
No.
But I would say on that side, like just looking at where things can go right now.
Yep.
There's opportunity. I think that's the biggest thing from this. And you're talking about now, all of a sudden, 470, 480 puts. A week ago, those weren't even in the options.
No, they weren't in play. It didn't make any sense.
Yeah. So being able to look at those. Now, the argument I hear back on that is, 430 isn't even profitable for me right now.
Totally the wrong attitude.
All right. What's the answer?
That's the worst that you're going to get, and it can only get better. So there's a lot of different things along the way. Time is on your side. It's a long way to December 25. Short and calls, but I wouldn't do that in this time frame. Like there's going to be things that you can do to try to improve the price. That was just simply what a lot of guys do. So you don't need to do them the same day. So what you want to do is establish a floor, because it sure does look like we're going to have a lot of acres, especially after this report. And although beans are fighting, establish that floor and work on building a better price. So you're not just stuck at 430. That's the worst. If the wheels come off, that's what it's going to do. Sometimes that's all the market's going to give you. Many people will take their chances all the way through summer, and that can pay off if you market at the right time. The March report's going to be hard for December 25, but you got a nice tailwind, so a lot of guys will just take the chance to see what happens in the spring, and that's not a terrible plan. That's worked. The pulling the trigger at the right time, and that if you're going to do that at the exact right time, that's the harder part. So if I was a producer, I would like to buy, like last year, the $5 puts. You have your floor established, $465, $5 minus 35 cents you paid for it, and then you can go to farming. But like you said, what's different this year is the floor is not quite high enough just to be be a profitable floor and then walk away and start planting. So yeah, it makes for an interesting market. I would, but it's the first time that it's made sense to do anything, I guess is kind of what I was saying.
My typical answer is if 430 isn't the number, is 380 going to be better?
Yeah, exactly. Yeah,
I do. Because that's what you're putting in play.
Yeah, well, that's what happens often. They skip it because it's not what they consider as a good deal, and get a worse price in the spring. That's happened for 3 years in a row, which would explain why the spreads aren't very good this year. Guys don't want that to happen. Store it in the spring for a lower price. They're very leery of even the report and the sustainability because they've heard this before and then it's gone down. So you're seeing a lot of selling into this rally, and I think that it's probably the right thing to do. You don't have a lot of choices. You got a lot of politics that are super unpredictable. You have a profitable price, and that's the whole point. And guys are taking it this year. I don't know whether they're going to be really regretful later on. For all this buying by the funds and all this good news corn's got for a very long time, it's really not that great of a rally. What, 35 cents?
Right. I'm curious, is that because of the amount of selling? Is there that much selling going on?
Yeah.
If it wasn't, would this have been a 60 cent, 70 cent rally?
Yeah.
It feels like it should have been. So well, let's talk about my feelings, John.
Yeah.
But I feel like it should have been a bigger rally. So I feel like there's been a lot more selling. I'm sure the numbers are out there and somebody can show me that has been. But
yeah, and I'm planning around that for, some of the stuff I have on spreads and stuff like that for tightness into the spring. Everybody always thinks it's July that gets the tightest. It's actually usually May is usually your best price, best basis. Highest inversion, meaning May will probably be more inverted over December corn than July will be. But everybody seems to think it's always July, and that's not the way that corn usually works. Soybeans can be that way, but May is the time period that I like. But it's hard to know if there's enough in the channels right now to really kind of glide into springtime, but that April time period tends to be the tightest for most commodities in the gray markets.
Yeah, I think the misperception, or maybe it was true 5 years ago, but that July is the best price. Every single person I talk to talks about that, and
I have no idea.
I've been in the business 8 years. I've been in your office for 8 years now. I'm pretty sure like July has always been my puts have always made money in July. That's not a recommendation.
I'm never buying July calls again. I told you about my 2012 story.
I'm not saying that they're July puts. I'm just saying my puts have always made money in July.
Yeah.
Now my July puts would probably get screwed.
Yeah.
But my puts have always been. Anyways, point being, I don't know where the perception comes from because I've only seen the downhill.
I think soybeans
or reversal.
Soybeans can get awfully tight in July and August, and I think it's more off. They remember that than corn topping out in springtime or the spreads topping out. I don't know why, but maybe because it's the last of the old corn. This year, I think that especially if there's a 40, 50, 60 cent gap, that if there's 96 million acres and the weather goes really good, I don't think July is going to be the strongest time period at all. That's why I still stick with May. I might be wrong on that. What if the weather's bad and we're not sure what the supply is going to be? July could explode against December, but it's just not that common at all.
No. And typically those type of moves happen late July, maybe, but August. Yeah, that's when you start seeing even drought years. You'll hear about the drought forever and forever and forever, and the price won't move.
Usually it doesn't involve people because everyone's sold, and that's why it's able to explode. There's nothing left to sell against it, so no one participates. And but I think this market's going to go from feel good about this report too. In about 2 months from now, they're going to be worried about those corn acres again, and that's going to be front and center. So they're going to quit trading old crop early this year and call it, be it right or wrong. They're really going to have a laser focus on all that acreage. And it makes for difficult markets that you have to take day by day. And I think the volatility is going to increase a lot. But I think the better marketers have a better shot at doing really well this year than guys that are going to wing it, because I think it's going to be easy come, easy go on a lot of different things, from politics affecting it overnight to, us pricing ourselves out of the market, and then all of a sudden the South American supplies hit. So there's going to be a lot of ups and downs, and I think it's going to be a very difficult market. But I also think with patience that those guys will do better. But we'll see. We're going to head right into it right now.
Yeah, I think it feels like a year where you should have a plan in place, because you're probably only going to get one chance at that. You aren't going to get a week to think about that price. It might go better.
It's going to be,
but it might go against you too.
It's going to be really flighty. It's gonna be very sensitive to weather forecasts, where we didn't have that even before this report. Now it's going to seem like every bushel matters. But if we get 95, 96 in and it starts growing well, we're going to have over 2 billion bushels again. So it's this weird, very supported market in a very short period of time. And then we have no idea what's going to happen in the trade deals. And then all of a sudden it's going to get very bearish again. You don't see this look very often, very odd look to a market. And I think it's going to be, trade the acreage one day, trade the tightness the next day in corn. And I just think you take it day by day.
Yeah. So what about soybeans? Okay, you started at the very beginning of the podcast. You mentioned it took it from very bearish to just pretty bearish.
Yeah, you need to.
What are we doing? Is there an option? Is there any option after this report? Because they've had a couple good days now.
I prefer hedge arrives. I do think that a lot of times the elevator taking the margins is better than here. But we're right on the cusp of not profitable. So what do you do with that? You do need to figure beans out, and talk with your guy, because it's a market that is going to give you a chance here, like you said, and then it's going to be gone. So that's important in this window that we have right now. And I will be talking with clients. I prefer soybean puts, again, upside open, but I just think that you have to have coverage for the politics that are going to happen right now.
I would agree on that.
Yeah, I think that's going to be super important, actually.
So you also briefly mentioned the wheat corn spread when you were going through earlier, but I felt like you had more to say about the wheat corn spread.
Wheat's got a story of its own, and that's something that needs to be watched very close. So you go into winter in very poor condition. Our Kansas wheat, I think, is okay, but still not great. The Russian wheat is in terrible condition, but there's no correlation to winter crop ratings and then final yield. None. It doesn't help that you start behind the 8 ball, but you get rain in the spring and you're fine. So that's the next move in wheat, is watching that world weather. Now, if it goes bad in Russia, wheat's going to have a nice rally for sure. But we're probably 6 weeks away from trading that. So that's what you'll watch next in wheat. Everybody's been bullish for way too long, way too early. And wheat has a way of getting you on the wrong side way too early and then giving up when it does go. But that has a life of its own, depending on the spring weather, for sure. I really like that spread. That's something that I'm going to be a part of, is going to be long wheat, short corn at some point. And this is going to be in the back end, not at all in the front end, December 25. But it doesn't feel like it's the right time right now. But when you get wheat this cheap versus corn, that provides an opportunity every time. You just have to obviously time it to some degree. But that is something I'm going to watch every day. And I have been for quite some time. I had briefly been in, and now I'm going to be out and looking for a spot to get back in.
Makes sense.
Yeah,
that's one I stay out because I don't like the margins.
Yeah, that one is going to move. That one's not going to bore you. It's unfortunately kind of turned into a long wheat right now. If you're in it, you're hoping wheat's going higher, because at first it looked like corn could be it could grind lower, even if it was 20 cents and wheat went up 30 cents, that's a nice gain. But now you're just cheering for wheat to go up. And so it's kind of in a vulnerable position right now, but wheat had a nice day today. The one market that did pay attention is cattle. They all of a sudden paying this kind of money in the sale barn might not be that great. It crossed their mind. This might not be a great idea if the corn market's changed. So it kind of didn't fall apart. It fell apart a little bit on Friday, then came right back. But I think it's noticing this endless cheap feed story's gone, and they're going to be a little more sensitive, I think. So cattle's a market that you have to watch. You have two things happening. We're coming into a seasonal top. And when I mean seasonal, just the seasonal averages. That happens at the end of January, going into the first week in February. And then you also have this new dynamic with the feed. It looked like it was going to be endless free feed, to where, you remember we were talking about it, like, where are they even going to put all this stuff?
Right. We did chat.
Those piles have dried up, and now you might have to pay up. So that attitude shifted in the cattle. I think it's going to start bleeding over into the futures, which I think you saw today even. But you can't call, after a run up like that, one little day down in cattle, the cattle top. But it is coming into a seasonal time where you can find a top depending on the winter weather. So that's a market that needs to be watched very carefully.
It makes sense. Are you watching both feeders and live cattle, or what do you?
Oh, yeah.
Yeah.
Yep. Feeders have been running behind cash, where last year when it topped, I think the feeder index was $18 ahead of the November contract, and that was the day that it topped. Very different structure to cattle last year. Huge premiums, and the cash was below the market. The front was kind of even, above and below a little bit, but the back end was way carrying huge premiums. This year, we're trying to catch up where the cash and the demand is. Much healthier looking market for sure. But at one point, the consumer will say that's enough as well. And that's where you want to get your hedges on. That's what's going to be the end of the cattle market. It won't be the supply. It'll be the demand on that supply, like $7.50 corn. It gets to a price where it's just not economically a very smart decision to continue to buy it. And cattle will get there, but there honestly is no signs of it. It's stunning that demand is leading this rally, because it's not like the cattle are light and they can't find any. They're heavier than last year, and demand is what's driving that thing.
You just made me hungry for a nice big tomahawk chop.
Yeah, I think it was beef today or tomorrow. Yeah, me too.
Yeah. I mean, I'm willing to pay for it still, so it must not be the top. My favorite
beef dish lately is just browning up some good burger with first saute green peppers and onions, and then add burger to it, and that's been great. I love that. That's been a staple here for lunch.
With a spoon or what?
Fork. But you could with a spoon.
I like it.
No, yes, very simple, but very, very good. So everybody else is enjoying beef clearly around the world. I mean, our exports are good with a strong dollar. Everyone loves beef.
Yeah, well, I prefer beef.
These ranchers might have been right after all. I've had some interesting conversations, and I think it has a lot to do with the meat industry and really leaning out this beef, or I meant pork. Pork's an unforgiving thing to cook, and nowadays, 2 minutes too long, and it's dry as a bone in that pork. So the leaning out of the meat industry, are people just going with the flavor? It kind of seems like it is. And then the chickens, of course, have been struggling with the woodiness of the breasts. And that's, of course, getting the chicken too big too quick. And have we seen a permanent shift? No. Something will happen. You remember the pink slime, and then the beef demand goes away. But right now, beef is king.
As soon as money changes, stock market changes, people can't afford the $65 steak.
I would have already thought that would have been happening. I've been totally wrong on the beef demand. It's ripping.
No, I agree with you. Let's go to my breakfast. I'm sure other people eat pork chops, but I like my bacon and sausage. So
yeah.
What is the hog market looking like?
Very strong. I mean, you're used to winter and just being weak. It was noted that June's already at 103, but outstanding demand there too. The whole meat sector has been a big, giant surprise. It seems like, was it COVID? Did everybody learn how to cook? Just that, you just don't see the product weakness, and you certainly haven't seen it in hogs, and the numbers appear to be down. So that's how we are where we are. The funds are extremely long, and hogs, things change very quickly. But it's been full steam ahead for the hogs, and that's been a demand-led market too. It's definitely not the futures way ahead of reality at all. It's been a great winter so far, and that's usually a big struggle for hogs. Hogs used to be traded a lot more when I first started. The industry's changed a lot, and there's still plenty of hog producers. But no, hogs, this is as good as I've seen hogs look through a winter. But no one's projecting 120 summer contracts, but it's if things don't change, I mean, anything's possible.
Hey, if we get to 120 summer contracts, I might trade hogs. I have an idea what side I'd get on there.
Yeah, I know. I've been watching hogs. A few guys have been spreading hogs. Hog spreads used to be my favorite. I certainly am watching my all-time favorite spread, and that's May-June hogs. But I'm not in it, but I have been following it. So hog market's a fun market. It's also a very fickle market. It can be very tricky, and it's right there with wheat.
I'd say it's more for like the degenerate gambler.
Yeah, it's just a market you can't get away from, but it just doesn't seem to be as popular as it once was. Maybe because it's a little too iffy. But it does remind me of wheat. It seems like you're always one step away from being in rhythm with it. Just a few days makes all the difference. But hogs, one of the better fall and winters that I've seen in a long time. So if it gets tight, like it usually does in spring, we could see a large rally still. I mean, there's still plenty of room. You get some news in there, some, disease, something that would really get it fired up. But then you also have to watch China. They've been very weak. So I like what I see in the whole meat complex, but I also still feel like we're 2 big days down in the Dow from everything unwinding, and people that felt wealthy on paper all of a sudden feel a little nervous. So I think it's going to be very tied to the stock market.
I would agree there. Anything else you want to add today? You want to talk stock market at all? We are kind of running up on time. But.
Yeah, we'll go over. We're gonna do an episode on the different markets guys look at. We talk a lot about grains and everything. What we're gonna do specifically, we'll do the financials and the amount of futures markets that we actually cover, which we don't talk about hardly at all. We'll do a whole show on that, maybe even the next show, and markets and their different personalities. So we'll save it for that.
Sounds good. How do people get a hold of you?
218-731-1578.
Thanks, John.
Sure. Bye. But I think, and I've been talking about it, it's a big mistake to take out the upside. And what's happened since?